talking through investment management, so investment advisors, this is a place where oftentimes we see entrepreneurs just chasing big brands. There's a reason they're a big brand because they've got great branding and they spend a lot on marketing. Generally, it also means they're a little bit more expensive and maybe you're overpaying for what you're getting. Now, a lot of the different studies will tell you that investment advisors actually, after fees, cost you more money than what they're going to make you, but they can provide a lot of value in terms of some of the behavioral finance, cash flow planning, and other planning areas or other planning topics. But when you're talking to entrepreneurs, how would you help them understand if the investment advisor they're working with is an A player or a C player?
Yeah, well, the first thing is most investment advisors don't have a specialty in working with entrepreneurs. So they're going to do the same thing with you as an entrepreneur as they're going to do for the 75-year-old retiree. And you have a whole different set of problems and opportunities. And that's the same thing with investment management, because investment management, we always mimic what the billionaires do. And they're not going to be just in traditional stocks and bonds. They're going to be in private equity. They're going to be in oil and gas. They're going to be in some other things that, unfortunately, if you get through a financial advisor, they're getting paid a success fee or a finder's fee or a commission on those products. And then that creates a problem with the incentives. I think, Charlie Munger, I believe he said, show me the incentives, I'll show you the outcome. That is so true in everywhere. I was recently speaking at an event and one of the large private banks was speaking. We're sharing the stage and they were talking about how they're fiduciaries and all this kind of stuff. And yeah, they are fiduciaries for probably 10% of the time that they're working with a client, but they're also not fiduciaries a lot of other times. And there's all these conflicts of interest. And interestingly enough, a bank, whether it's a private bank or a regular bank, they're an adversary to you as a business owner by nature. And that is because when someone's loaning you money, they want more collateral and they want a higher interest rate. You're on the opposite side of the table as a banker. And for a banker to say, hey, we're actually on your side, that actually doesn't communicate the conflicts of interest. So whether it's a private bank, a brokerage firm, or even independent RIAs may have conflicts of interest that you need to know about. Their people could be insurance licensed. They could get paid for private deals. They could get paid in a lot of ways you don't see, and that creates a problem. So you want to make sure that whoever you're getting help from in every part of the wheel, but especially in the investment advice, the incentives are aligned with yours so that you can count on the advice that you can trust.